but let's get in our guest for the show, Mayuresh Joshi. He's a fund manager, Angel Broking. Mayuresh, very good afternoon to you. Your first cut and take really on the numbers we've seen out of a TVS.
Afternoon, Fatima. Yes, I think the bottom line more or less in line with estimates. And largely, I think the operational performance has been quite exemplary by TVS Motors. Now, what has actually happened on the top line will be more or less with what kind of a product mix. And as Hiral was elucidating the fact that the product mix also has been quite good, along with strong growth even exhibited in the exports business. So yes, I think good set of numbers, but the management commentary will give a testimony in terms of the roadmap and the landscape ahead, both in terms of domestic demand, how the export outlook is looking, and even the progress of the BMW tie-up. So I think the double-digit margins that one was really expecting TVS to post over the next few quarters, if the management holds by that commentary, I think the numbers would be a very good show that they have exhibited. So yes, I think good set of numbers by TVS Motors.
All right, so that's the story on TVS Motor. At this point in time, we will kind of give you a further assessment of how the entire auto sales picture is also panning out and how two-wheelers are doing against the passenger vehicle numbers that have come in. But of course, Maruti remains in focus for the kind of numbers that it has posted, and that has kind of reflected in the stock. And then we've retraced as well. About a fifth of a percent cut is what we're seeing on Maruti, at least at the moment. But those auto sales numbers are going to be key to watch as well. And commentary, like we said. But operationally, for TVS Motor, it seems like a very strong quarter. On the bottom line as well, we've seen a beat coming in at the kind of number that they have posted. We are seeing a 20% year-on-year profit growth. This is the PAT number that we are looking at, so which bodes well. But the stock is currently taking a cut of about 0.4%, trading at 720 rupees a share. Meanwhile, the focus is also on Bharti Airtel. Look at that stock. Let's pull that up. It's about 10% up in trade. It's reached a 10-year high in trade today, and this after its stellar Africa business performance in the September quarter. The rally has also been fueled by the hopes of the early sale of its tower business. Mayuresh, what do you make of the kind of numbers that we are seeing on Bharti Airtel? The question that I had from my expert yesterday, and it stands today as well, there are a lot of moving pieces. The blended ARPUs, how the Africa business does, but currently the market looks pretty bleak as far as the domestic kind of scenario is concerned for the entire telco pack. Mayuresh, where would you say is a buying opportunity waiting for us in Bharti Airtel? Not today for sure, when you're seeing this kind of bump up in the stock price.
No, so as you rightly mentioned, Vikram, I think it's a sum of parts story for Bharti Airtel at this point of time. With the recent merger that they've done for the Tatacom business, for the Tata Tele business, I think that will augur well in terms of the subscriber base. Secondly, I think it's coming out of a very seasonally weak quarter, so the expectations were always with pricing pressures coming through from its competitors, and the extent of pricing pressure is actually getting exhibited in terms of ARPUs, which got reflected at 145 rupees. Were a clear indication of the fact that the industry is still facing competitive pressures. The third element of this entire argument becomes when the ROCs have actually dipped to 5.1% over 7% on a year-on-year basis, and this is basically on the premise of higher spectrum costs. There has been higher OPEX expenses and the capital expenditure as well. So that has unfortunately led to debt levels ballooning to 91,480 odd crores in this quarter itself. But largely, again, I think if you look at the positives that the sector is facing at this point of time, with a clear consolidation happening in the industry, the pricing pressures over the next few quarters should abate. Secondly, again, with Jio starting to price its customers, the escalation in terms of more cuts coming through probably remains a little bit of a suspect factor right now. The third element would again obviously be the IOC charges, and that would have a significant dent if validated by the Supreme Court or the highest authority in the sense of an earnings cut. And to that extent, I think the GST rate increase probably also plays on and weighs on to the margins. But that has probably got offsetted by the African business, which has contributed 24% to the overall top line, and with margins have held up pretty well. The other corresponding factor is also the data consumption. So 784 billion megabytes is what has got consumed, and that's a substantial jump for Bharti Airtel. So even if data ARPUs are consolidating at lower levels, the volume offset will probably offset the kind of fall that we are probably seeing in terms of the overall bottom line. So it should stabilize. I think the markets have taken this positively. Any deleveraging factor because of tower sales and other factors should aid the balance sheet as well. So on an EV/EBITDA basis, probably I think the numbers do justice to what the stock has probably delivered in terms of performance. So largely, yes, I think the whole rating on the stock is something that I'll still recommend investors to do.
All right, so that's quite a full picture that we have in terms of how things seem to be settling when it comes to that particular counter. But let's talk about auto sales, because we've seen quite a mixed picture that's really coming out of the October numbers there. Maruti has seen strong domestic volumes, but at the same time, those exports have certainly faltered. Eicher has really failed to live up to the volumes that we were expecting. Escorts has in fact seen a 13% jump in those tractor volumes. M&M has registered a fall. But let's talk about more of those numbers in detail by getting in Hiral. She, of course, tracks this sector. Hiral, give us a sense as to how these different companies have fared and what it is that's really creating this mix.
So overall, if you go to see in terms of our auto sales numbers are concerned, we have Maruti, Eicher as well as Escorts, which has posted the numbers so far. The numbers are not discouraging, but they're slightly below what the street was estimating so far. It's only Escorts which is slightly above. Maruti, if you go to see, the total sales have moved up by around 9.5%. The domestic sales have seen a growth of around 10%. However, the expectation was around 12 to 13 odd percent. Overall, if you go to see, it's mainly, if you talk about Alto as well as Wagon, that has been a downer this time around. But if you talking about Baleno, Brezza, Celerio, these are few of the models as well as Desire Tour which have done well, and that's what has led to this kind of growth in the domestic market. In fact, even exports have started to show some signs of pickup, so we could see some bit of higher revenue contribution that could start coming in from the export business as well going ahead. Apart from that, UB sales are up 29%, LCB as well has seen some bit of growth. Talking about Eicher Motors as well, the total sales have grown by around 18%. The expectation was above 20%, 21, 22 odd percent was what we were looking at. So that number is slightly below what the street was estimating, and hence we are seeing some bit of pressure on the counter as well. Up to 350cc model sales have gone up by 18%. 350cc plus models, the sales have gone up by around 9%. And exports have also been slowly, steadily inching higher, which has shown a growth of 98% at 1,478. Though exports is still a smaller portion of their revenues, but that's the business where Eicher Motors is now looking to concentrate on as well. And lastly, talking about Escorts, agri machinery total volumes have grown by around 14% at 10,205. Wherein the domestic tractor sales are up around 13%. They have seen some bit of an impact of GST as well. So overall, numbers are not discouraging, but slightly below what the street was estimating so far.
All right, thanks a lot for taking us through all of that, Hiral, really giving us a sense that these numbers are not overall disappointing, but they're of course a little bit lower than what they were being expected out of. Mayuresh, your take on these auto numbers that we're looking at, and also by deduction how one would advise an investor in terms of, I guess, allocating their money to these kind of stocks.
So I wouldn't say entirely disappointing. My entire sense, Fatima, is that you've just come out of a festive season, and the festive season buying has already got reflected in last month's numbers. But as we move ahead into the calendar year, and as more and more discretionary spending patterns emerge from the economy, specifically after the implementation of GST, restocking effect, and again I think the kind of distributions in terms of commission recommendations coming into semi-rural and rural areas, I think that's going to have a significant trend in terms of how volumes are expected to pan out, specifically for the agri machinery stroke tractor equipment. So I'm not overly perturbed in terms of what the street was expecting, but you should see a very gradual kind of a recovery happening in terms of the agri equipment or the farm equipment machinery volumes going ahead. In terms of two-wheelers as four-wheelers, my own sense is that one really needs to be stock specific at this point of time. And again, I think the volume picture here is going to play key because input cost inflation has probably started eating into the margins for a lot of these majors. But a large part of that element is also a pass-through effect as demand starts coming back and reverting back to mean. So with that sense, again, I think Hero MotoCorp's numbers are expected later in the day. TVS Motor, as I said, had a good set of numbers. But also, I think with the management commentary and with the premise of posting double-digit volume growth, I think the leverage should be very, very evident. So I think Hero MotoCorp is still something that I'll continue to prefer. And from the four-wheeler space, I think Maruti still remains our favorite. The kind of variant mix that it has got across product categories, I think that definitely holds up for Maruti. And again, I think the Gujarat plant, as the ramp-up happens, the kind of unabsorption of fixed cost element should start getting gestated over the next few financial years. So yes, I think being selective, but I think these are the stocks that we'll still prefer on any given day, any given decline in a very staggered manner.
Yeah, so any declines on Maruti on a day like today, where we are seeing some of those auto stocks take a bit of a hit. Even TVS Motor, like we said, they just came out with their numbers. That stock is down about 2 percentage points right now. Eicher is down about 3 percentage points. So there could be some buying opportunities over there as well. Mahindra & Mahindra is marginally down, and this on the back of the auto sales numbers that are getting posted. But you look at some of the ancillary names like an Exide or a Motherson Sumi or an MRF. Some of these players are in the green today, and that seems to be the larger component of the auto pack in the BSE auto pack that we're looking at right now. So some of those stock names within the ancillary pack are doing well for themselves. But you did mention Hero Moto over there, Mayuresh, and that is going to be in focus today because their September quarter numbers come out later. A stable second quarter is what we're expecting from the company. Their profits are seen up over 3% this time, and revenues are also expected to see a boost from higher volumes and higher realizations. Since Hiral is still with us and she actively tracks the auto space, Hiral, do tell us now what to expect from Hero Moto this time for the second quarter.
That's right. So a stable set of numbers is what is expected. Net sales up around 6% during the quarter at 8,806 crores. Profits are expected to move up by around 3.5% at 1,039 crores. And if you see in terms of the margin profile of the company is concerned, we're expecting a slightly flattish move at 16.5% versus 16.4%. Now, overall, the revenue growth that we are seeing is mainly driven by higher volumes as well as better realizations during the quarter. And the realization improvement is mainly driven by an improvement that we are expecting in terms of where the average selling price goes. Now, the company, as we know, has been taking a lot of cost-cutting initiatives as well. And on the back of that program, as well as economies of scale, we are seeing some bit of aid that is coming in on the margin front. However, commodity prices have been high during the quarter and that is impacting margins. Marketing costs also are expected to be higher this time around, so that is also expected to impact margins. So if you go to see higher commodity prices and marketing costs versus cost reduction program and economies of scale, that's where we are seeing a balance, and that's the reason why the margins is expected to be flat. Apart from that, the two-wheeler volumes, if you go to see, have seen a growth of almost 11%, and this is mainly on the back of the festive season cheer. So we will be watching out for as to what the management has to say in terms of a demand in the rural market is concerned, as well as the update on the retail demand. Discounts given, as well as if there will be any price hikes that could be undertaken in the second half of FY18. The guidance in terms of the export business is concerned, because even Hero Moto is now looking to ramp up the export business, as well as the new launches that could be looked at in the second half of FY18. But overall, a stable set of numbers is what is expected.
All right, Hiral, a stable set of numbers is expected from Hero Moto, and we'll see how that really pans out when the numbers do come out. But quarter percentage rise on Hero Moto is what we're seeing before those numbers come in. And then let's track another sector. This is the FMCG space, and within that, Dabur has seen some strong gains in trade after it hit a 52-week high. And this after brokerages have hiked their target prices on Dabur. Shell is here to tell us more about what brokerages are seeing that is making them so positive about Dabur. But even before that, let me address Tata Motors numbers, because we're looking at the October numbers, and the number that is being posted is around 49,000. That's the kind of sales numbers that they've hit. The domestic sales are around 49,000 units. The Tata Motors stock has been up in trade today, and it is one of the biggest gainers on the Nifty, about 2.5% gain, and this just before the sales numbers came in, and the domestic sales have gone up about 5% year on year. If you look at the same period last year, they made a gain of around 5%. So as far as your picks go, Mayuresh, when you look at a number like 49,000, which, like you pointed out, is an outcome of what has happened in festive sales, but the same trajectory now, there are going to be several moving parts over here again in the auto pack, and you've said that four-wheelers and two-wheelers, you need to be a little stock specific. But then my question is that among the laggards, you did mention farm equipment, commercial vehicles, they've been the laggards within the auto space, and there needs to be a word out for the ancillary players as well. Which are your top picks outside the most obvious ones that you pointed out, which is Hero Motor and Maruti?
No, so I think if the original equipment manufacturers are going to do well in terms of volume growth over the next few quarters, the ancillary players also should benefit, not in a direct proportion, but again, I think the kind of incremental gains that can come through can be significant on their balance sheet. So I think tire players like JK Tyre is something that I've always liked. The recent anti-dumping duty on MHCV tires is going to augur well for this company. And again, with the kind of market share gains and leadership position that the company commands, my own sense is that the radialization story is going to give further benefits to the company, both in terms of realizations. We might very well argue, and that argument is validated by the fact that input costs have gone up. But again, I think the margins in the replacement business and the ability to pass through, because the unorganized sector is not able to compete over the next few quarters with the organized players, should augur well. The other element also becomes battery makers. So I think Amara Raja is something that we still continue to prefer. It has had a torrid time over the last few quarters. Input cost inflation, volumes not growing as expected, and again I think the kind of dent that we've probably seen in reported numbers over the last few quarters has clearly got displayed onto the stock price. But largely over the next few years, again I think it is one industry where I think the organized players, including Exide, I think they rule the market share both in terms of the automotive as well as the industrial business. And as the stability starts coming through in terms of the input costs, you're probably going to see more and more demand come through, and as the latent demand starts coming through, the leverage in terms of the return on capital employed, because a large part of their capex has already got committed and has got commissioned. I think that unabsorbed fixed costs start coming down into the balance sheet and ROEs start improving. So a large element would become these two stocks. And yes, I would also keep my eye on Gabriel India, but the stock has moved up significantly. I think one really needs to wait for declines onto this counter. Again, a very strong player. But I think a couple of benefits which have gone out, the 35 2AB benefit which has got reduced from 200 to 150 odd %, and the reduction of ATIC or the removal of the ATIC benefits, the effective tax rate probably goes up. But if you adjust these numbers, my own sense is that there is still reasonable amount of scope with the two-wheeler industry that it caters to, the passenger vehicles as well as the commercial vehicles, and again a very, very strong balance sheet that it probably possesses.
All right, a very strong balance sheet there, and important what you're saying in terms of the kind of timelines one should be looking at when it comes to, I guess, certain elements of the balance sheet really coming together, and the credibility that some of these companies have and maintain. Thanks for having joined us, Mayuresh Joshi, Fund Manager, Angel Broking. Always a pleasure to have you right here on our show. Still ahead, we're going to get you more conversation. We are connected.